Hello and welcome to the latest investment market update. I hope that you're all keeping well and enjoying the good weather. I'm Brian Morman, Chairman of Brunsdon Financial, and today I'm being joined by Mark Shields, Investment Director at Brooks Macdonald. Brooks Macdonald have been carefully selected to manage the Brunsdon investment funds, and using their expertise, the team analyse movements within the market and make tactical changes. Mark, the world order, as we have become accustomed to, continues to be challenged. Trump's tariffs are having quite an effect on the market and the world at large. What's your take on where this is all going?
Yeah, hi, Brian. It's very, very difficult to say at the moment, largely because the situation, especially with regards to things like tariffs, is incredibly fluid. Essentially, Trump and or his team are saying one thing one day and then changing or even reversing course completely, sometimes a matter of hours later. So the sort of actual impact of the tariffs is likely to be slightly tricky to really gauge from now, quite simply because we don't really know whether they're even going to be implemented in a few months' time or not. However, what we do know is that already the sort of threat of tariffs and the tariffs that have been introduced have had quite a dramatic impact on the propensity of companies to invest. Also, the sort of consumer in the US appears to be coming under some pressure as well. Again, US consumers seem to be a little less willing to spend money than maybe they were just a few weeks ago. And also, we've seen quite a bit of disruption to global supply chains, not on the sort of scale that we saw at the peak of the 2020 COVID situation, but we are still seeing a bit of an impact with regards to, kind of shipments being moved to various places where they weren't necessarily intended to go, places sort of stockpiling goods outside of the US in expectation of potential tariffs being lifted at some point in the future. So we are seeing quite a lot of disruption when it comes to the general situation on the global trade scene as well.
And how has this affected the Brunsdon portfolios? For instance, which assets have been more or less exposed to market weakness?
Yeah, it's been a little bit of a mixed bag in some ways. So, obviously US positions have been sort of the hardest hit, really, if I'm honest with you. We are fairly fortunate in that we are underweight the more exposed parts of the market, such as the highly valued technology stocks, the Magnificent Seven. We're relatively underweight there. However, we do have exposure to US smaller companies in the Adventurous fund, for example, where we're a little bit overweight. And unfortunately there, even though the valuations work in favor of those smaller companies, they're relatively cheap compared to US large companies. Unfortunately, given that the economic situation in the US has now been called into question, those have come under a little bit more pressure than we would have liked, essentially. Areas that have held up much better have actually been, quite a few markets outside of the US. The UK, for example, has performed relatively well. Europe has performed relatively well. So, we have got an overweight to the UK, and that has been quite beneficial where we have seen that weakness being concentrated more on the US. But as I said, things are very fluid. Things remain volatile, and markets are moving around quite a substantial degree on a daily basis at the moment.
So the big question is, where do you see markets going from here? Obviously, you've said it's very, very fluid, but any particular thoughts, Mark?
Again, very, very difficult to assess. I mean, the situation with the tariffs, I think, is potentially kind of, we might get some sort of greater clarity in that over the next sort of few weeks, really, where we see whether Trump and his team actually do kind of start to introduce trade deals of some descriptions, and kind of, I know the UK is talking quite extensively with the US at the moment, as is Japan. And it might be that, given what's happened in the markets, the US is actually willing to almost use that as a bit of an excuse to step back from some of these tariffs. And indeed, I noted this morning, last night, Trump actually said that he or one of his key advisors actually said that the tariff situation in China would come down. So where a lot of the focus has been on tariffs, it does seem as though the market reaction has been sufficient to make the US administration realize that maybe they've gone a little bit too far. Now, I do not for a second moment want to really kind of second guess exactly what is going to happen with regards to Trump, because it's very mercurial. We don't really know, but that seems to be where we are at this point in time. Possibly the bigger question, maybe a little bit further out, is the concern that markets have started to develop over the traditional safe haven assets of US Treasuries and the US dollar. We've seen instances here of essentially the US dollar, US Treasuries, and the US equity market all selling off in tandem, all at the same time. That's not a healthy, normal market movement. And actually, that does beg the question whether actually investors, global investors at least, are now starting to question whether the US dollar and US Treasuries are actually a safe asset, in inverted commas. And that could have fairly significant financial repercussions further down the line if that goes further than where we are at the moment. Although, again, quite a bit of the sort of pressure was caused by Trump sort of threatening to try and get rid of Jerome Powell. Well, actually seems to have stepped back from that a little bit last night as well. So again, even that is quite fluid, and we don't really know exactly where sort of that's going to head. But in a nutshell, I think our portfolios, the Brunsdon portfolios, we feel are quite well positioned at this point in time. We've got a bit of risk in there for when markets recover, but also we've got a good solid core of defensive assets, especially in the cautious fund, that we feel should continue to hold up if market volatility persists.
Okay. Well, thank you, Mark, for that. And thank you once again for listening. Once again, if you have any questions or queries, please be in touch with us. Thank you.